this is a shorting opportunity. It's an opportunity to fade this particular market. So it's a short-term rally within the context of a well-established downtrend, as you can see with Brent, for instance. So this is a very, very minor move within that environment. So if we're looking at NYMEX, for instance, the downside target is 29.30. That's the initial support level. But the key factor is that once it falls below 30, the nature of support and resistance changes in that market. So 18 is potential, but it's a low probability at this stage.
Low probability 18.
18 is a low probability.
Good to know. And for oil, basically, I mean, this rally, this is something to sell into or short, is what you're saying.
That's right.
Right. And we were talking about this a couple of seconds ago as well. I mean, traditionally, it's always been, look, trouble in the Middle East, geopolitical tensions, etc., oil goes up. In this case, right, I mean, this wall of oversupply is just so absolutely huge. Any rally that you see on geopolitical tensions is just going to get overwhelmed by that.
It gets swamped. And look at what happened yesterday. Louisiana came online for the export of US shale oil gas. So that's another factor that depresses the whole oil gas commodity complex.
Indeed, indeed. Okay, let's take a look at the S&P. If we could, worst start to the year since, what is it, 2001? Man, not good.
It's not good, but it's not the end of the world either.
All right.
And there is a theory that says you look at the first trading day in January and that's the way the rest of the year will follow.
Yep.
And if you're not too sure on that, you look at the end of January and that's the way the rest of the year will follow. Sounds good, doesn't work very much in practice.
Okay.
So it's a minor sell in relation to other sorts of things. So look at the broader outlook with S&P. And S&P is, we've got resistance sitting here at 21,000 or 2,100, thereabouts, and support sitting here at 1960. We are in a rally retreat behaviour within that broad trading band. We're not going anywhere.
Not going anywhere. So what about these calls? We've got calls, end of the year calls, right? 2,100 on the low side, 2,300 on the high side, nowhere near that.
Resistance at 21,500, or 2,150, which is just up here, and here. So if we take that and project it upwards, yes, we get our target around the 2,300, 2,500 level. But we need to see that solid break above 2,150.
Okay, got to get up above that, crack it and hold. Gotcha. All right, let's take a look at vols and the VIX.
Volatility index, key factor with the volatility index is it tells us nothing other than the market is preparing for a change. When the volatility index spikes, it tells us the market's anticipating a major change. It doesn't tell us the direction. At the moment, it's relatively high, but it's beginning to slip off. So it's telling us, it's confirming this behaviour within this broad trading band.